Hello, everyone. Welcome to episode number 12 of Entrepreneur Gains, where I interview Y Combinator alumni. On today's show, I have Karn Saroya, founder of Cover, a startup that simplifies insurance. Traditional insurance companies aren't always great at helping people understand the policies they buy. Cover uses the right blend of mobile technology, automation, and expert advice to match someone with a policy that works for them at a great rate for just about anything you can capture on camera. Cover employs machine learning and computer vision, so you can literally walk around your home, point your camera at your belongings, and you're covered. Before starting Cover, Kern previously founded StyleKick, which got acquired by Shopify. In this episode, we talk about journey of building a high growth startup when you're having an amazing month over month growth, hiring more and more employees, and raising more investment. I hope you guys enjoy this episode. Hey, Kern, welcome to the show.
Thanks for having me.
I'm so happy to have you, man. There's so much I want to talk to you about. I've been following your journey for almost 4 years now since we met.
Yeah,
Um, want to start off with just like telling the viewers what does Cover do, and just any kind of numbers that you're willing to share, basically.
yeah, sure. So, Covers a mobile only national insurance entity. So customers download our apps, they take pictures and videos, answer some questions, and we get them property insurance. We're pretty big into car insurance, home insurance, renters. Primarily, our customers tend to be younger. So this is a significantly underserved segment of insurance. Typically speaking, younger people pay more. They have less market access, and so we think of ourselves as serving the analogy here would be like the underbanked but the underserved in insurance, which happens to be the fastest growing segment in not just financial services but insurance as well.
Love it. And any kind of numbers you're willing to share, how much you've raised, how many employees, or anything like that?
Yeah, yeah, sure. I mean, we just raised again. It hasn't been publicly shared, so you'll probably see that at some point. But publicly, it's been about 27 million.
Perfect.
We are about 70 employees between, I guess, now everywhere.
Yep.
Uh, we even just moved to completely distributed in San Francisco and got out of our lease, so it's kind of just people all over California and the West Coast. And then we still do have an office in Toronto. Yeah.
Love it. And any kind of things on like month over month growth or any customers numbers or
Yeah, sure. I mean, COVID's been a really interesting time for insurance, right? Like it's one of these. First of all, insurance is a beta of less than one. It is also traditionally countercyclical, and COVID in particular has been, very good for insurance. Like, if you're just looking at just insurance economics, losses have fallen, right? So people aren't driving as much, and they weren't driving as much in March, April, May, but still not driving as much. So claims frequency has come down. There's been huge margin expansion. The market for eyeballs to acquire customers is efficient, and so the cost to acquire has come down. And because we primarily sell products that people have to have, and we do it in a way that is convenient and value oriented for them, our retention is held pretty steady too. So in general, like if you're taking a look at not just folks in insurtech, but incumbents like Geico, Allstate, Nationwide, Progressive, there's a reason that they're offering 15, 20% back right now in the form of credits because they're making a lot more money than that 15 or 20%. So I'll leave it at that.
got it. Okay. Love it.
Yeah, yeah,
Okay, I want to start off part one of this podcast with your story. How did you get into the
yeah.
startup world?
Yeah, yeah. So this is my second business. I built a different business part of it. This was very still e-commerce focused. Sold high end fashion on the internet. I built a business called StyleKick. Grew that to about 1 million active users. Our team ended up joining Shopify. And which was really cool. And I have a ton of respect for them. They've obviously like 10x since we left. So much kudos to them. And so a very very deep e-commerce background. We built an understanding of how to build sexy products to somewhat fickle customers. And then ported those skills in building out consumer mobile facing experiences to insurance. And we actually didn't know anything about insurance when we first started, but are probably amongst a fairly finite set of human beings who have launched an insurance company or insurance programs, from scratch now. So I mean, my journey started. I went to grad school in the United States. I'm Canadian. I went to MIT. After that, I was at a management consulting firm, primarily in financial services, finance and risk, and I did a little bit of insurance work, but I didn't really understand insurance. And candidly, right, like I was probably a terrible management consultant because all I was doing was learning to code evenings and weekends, thinking up what we could be building. Myself and my co-founder are long-standing friends. I went to high school with Anand. Natalie's my fiance. Ben was, our first hire into StyleKick, and really just pitching myself on ideas that could work, right? And insurance. Uh, so after having left Oliver Wyman, I worked in the fashion business, and that was again, we built some random thing. It was a body scanner that was built out of three Connect sensors. You get a depth sensor and a webcam. You got 3 points of perspective. You can get a body form. We thought we could build 3D body scanners that we could install at retail locations. You start somewhere, right? It's clearly a very creepy thing and didn't really conform with any sort of secular trend, but we learned that really quickly. And then pivoted to a consumer-facing app where we allowed like lookbookers and fashion bloggers to upload outfits and make them shoppable. And so it was like a like it to know it, but like a shoppable Instagram, and it took off. We did really well. We ranked number one for style in France, registered 1 million
No
actives,
way.
and then kind of, building a company in Toronto, especially a consumer company in an environment that was primarily conducive of SaaS businesses, which is just a truth back then.
Yep.
It was difficult to raise, and so we considered, a couple of different landing spots, in suitors in the United States, and ultimately homegrown Toronto. We knew Craig Miller and Satish Kanwar. We were one of the few teams there that had any meaningful mobile experience, and so we joined. Right, we still had the itch, admittedly. Once you've kind of gotten to the drug of all of this self harm of building a company,
Yeah.
you tend to romanticize it a little bit, and then when you jump back in, you're like, shit, this is even more painful than I remember.
Yep.
But we did it anyways, right? So we left Shopify on really good terms, and joined Y Combinator, and we were part of the same batch.
Right.
So from there on in, all we did was tinker with, could we drive tons of customers into an insurance flow, learn more about what their needs were. Eventually, we built a national insurance agency. Eventually, we started to launch our own insurance products. And it took a little bit of time for us to really understand, what was going to work well in fintech and insurance in the United States. And what's become very, very clear is that the types of customers that are engaging with financial services and insurance businesses on the internet, they tend to be younger. They tend to be not as wealthy as boomers, right? They tend to be much more open to trying new services that their parents would have otherwise referred them to, which is why you've seen the ascent of folks like Chime, with a unique set of banking services and cash flow management services that really work for young people.
Yep.
Similarly with Cover, primarily we sell our policies in app or via SMS. We do things like help our customers bridge payments. It's insurance is not cheap, and so we'll do things like spot a customer $100 free of charge, just to make sure that they stay continuously insured and legal,
Yep.
so that they can unlock discounts into the future. So it's really it took us a really long time to understand what, outside of just like having insurance and financial services, like what the real problems that the folks that are using Cover were facing. And so maybe that validates all the pain that we've subjected ourselves to over the course of the last 7 years.
That's
Yeah,
amazing. I
yeah,
so first of all, like I want to ask you one like question. One thing you said that you were coming back home after your job and learning how to code. Like,
yeah.
where did that come from? Why was it so important for you to learn how to code? Or
Yeah, I think I just knew that I didn't want to end up in professional services.
Okay.
I was never really a big fan. Um, Even though I have a degree in finance and I have a CFA, I was just never really a big fan of working at an investment bank or a consulting shop or a private equity shop. There's nothing wrong with that type of occupation, but it just wasn't congruent with my own risk tolerance, right? Like I kind of view not going out on a limb and not putting yourself out there when you have an opportunity to do so as a fundamental risk, right? I want to be able to like look out 20, 30 years and have conversations that are really interesting about how I spend my time. And that's not to say you can't have really interesting conversations about being a management consultant, but these conversations are another level. Yeah,
Makes sense. When you start up, there's
yeah,
so many
yeah,
ups and downs, and you're learning
yeah,
so much, and you're going through so many
yeah,
different areas which you would never go through at a normal job, which makes complete sense to me.
yeah, yeah.
So I have a hunch that you're a maker and you love building things. Was it about solving a problem in general, like with technology, or did the industry matter to you, or it was just about I wanna be a startup founder, or was it like I want to solve this one particular problem?
I don't think like I thought of it as I want to be a startup founder. I don't think that's anything that anyone. I think some people like I want to start a business, but a startup founder is like a kind of a made up thing, right?
Sure,
It's like
yeah,
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 and I don't think I ever had aspirations to be a founder. I really just had an itch that I had to scratch, right?
right,
When you talk to other folks about hey, like the risk adjusted returns to entrepreneurship and specifically in technology are pretty poor, right? Like you can make a lot more money
yeah,
going to work for Fang uh, and working on some narrow slice of a thing and perhaps like live a reasonable life. Or you could throw caution to the wind and try and take on unstructured problems, right? Unstructured problems and become really, really proficient at solving those. So to answer your question, it was more so about an itch. I don't think that I thought about myself as like a founder. I was just like, I need to try things
yep, yep,
because I'm bored
yep.
and because I want to live an interesting life. That's it.
I love it.
Yeah,
It's
yeah,
funny. It's funny that you say that. So, did you have that exact same mindset with respect to like you said you can make more money doing a job or example like
mm-hmm.
specific kind, obviously, but
Mm-hmm.
because I didn't have that mindset. I learned about that after doing the startup. I'm like, okay, this,
Yeah,
you
yeah,
know what I
yeah.
mean? Did you have that mindset before you did the startup, or did you have that mindset?
Um, No, I think I'm in the same boat as you. I
Yep.
actually didn't know what the economics of,
Yeah.
you know, being in tech could look like. And, like things like Shopify 10xing, they play a role. Like there's so much wealth creation that's happening, and a lot of really smart people have been part of a lot of these stories, and certainly we are afforded the privilege to be part of one,
Yeah.
which is rare. But I would choose this path
Yep.
for sure.
Makes
Yeah,
sense. Um,
yeah.
so what is it? So you're one of the like person I know who's building a high growth startup. Like, I watched your talk with YC, the one you did in the podcast. It was amazing, which I
Yep.
highly recommend to anybody. Probably one of the
Thanks.
best podcasts I've watched on like in YC's podcast thing. But like, what is it like to
That's high
build?
praise. I
Uh,
appreciate that.
yeah, no,
That's high praise. I
it was
appreciate
really
it. Yeah.
amazing. It was really like there was so much out of like learnings out of it. Um, what would you say is it like to build a high growth startup?
So when we first started off, we were like, okay, well, we had no skills with respect to building product or fundraising. Yeah, these things we picked up over time, but we kind of deluded ourselves into believing that like you hit a certain milestone and things get easier, right? And so like initially it's product market fit and making sure that like people you find a nugget of value, people pay you for it, you can start to compound on top of that, and then hey, you've got to build the scaffolding. Like you raise more money and you're like, oh wow, I have lots of money in a bank account, and it doesn't really matter because like you still have so far to go. And now you start to build the scaffolding to really productize something and start to scale it out. And the skill shifts, it shifts, right? I think the one common thread through all of it as a founder, specifically a CEO, is just like you realize you're a salesperson at the end of the day, right? Like you're selling in the initial stages, you're selling early stage investors, you're selling early stage employees on a vision. Eventually, you've got some more data, you've got some more capital to build like this organization, which is fundamentally what your job starts to become, to hire senior talent, to continue to raise a set of vision and product strategy in conjunction with other product folks on your team. Um, it changes. It just gets harder, right? I think the thing that folks who are just trying to raise their first round are like, hey man, I raised this $1 million or $2 million, $3 million, and I'm kind of on easy street. It is not the case. It gets 10x harder every single step, and it's because your skill set and you as a founder are either going to scale up into these new required skill sets, or you're going to scale out, and either is an okay consequence, right? Like either is an okay path. There are lots of founders that don't and are like, I'm very content being a builder of things rather than a manager of managers, right? Or rather than a high end technical recruiter for very senior technical talent, or a very high end business recruiter for other for ops people and things like that. It's forced adaptation. It just continues and it just gets harder, right? Yeah.
Very cool.
Mhm.
With I when I watched your podcast, you said with Stylekick and Cover, you had an MVP, which helped you test out the idea fast. Uh,
Yep.
would love to know more about that first of all. Like, what was the MVP? How did you guys test it that there was legs to build this particular startup?
Yeah.
We should double
Yeah.
dive.
Yeah. I'll share. I mean, the StockX story is pretty straightforward. Again, didn't know anything about fashion. Didn't know anything about e-commerce. Candidly, like when we were building a body scanner, didn't know anything about a body scanner, but like building a body scanner. The MVP for StyleCake was, I think we scraped like 20 to 50,000 like blogger and lookbooker photos, and one of the key features with StyleKick was you could double tap on an individual part of an outfit to like it, right? Like it could be a blouse or a handbag or whatever, and we would under the premise of activity, promise to show you content and styles and looks that would increasingly be tailored to you, right? But the initial MVP was just scraped content into a fairly rudimentary, view that just captured double taps on individual parts of an outfit. We started logging that to see if, how many parts on average of an outfit would people like? Like, were we getting better at this or not? But it was super simple. It's a two-sided marketplace. We have content creators and you have people who are using it and buying. We just replicated the content side and then eventually started to filter like fashion bloggers and influencers and things like that. So we hacked it that way. Cover was super interesting too. We didn't know anything about insurance. We just knew that the back of the envelope math for insurance looked really good, right? Like it's an annuity business. If you can get a policy up and running, even from a lead gen perspective, it's really good, right? Like the highest CPCs on high signals networks like Google, or even discovery mediums like Facebook, you know, are huge. They're like you're paying like $40 to $100 a click, for low single digit conversion down the funnel. So the acceptable CPAs are huge. And so we're like, okay, well, math leaves us with a lot of potential meat. I don't doubt it's an efficient market. What we want to do is we want to show that, hey, we've got a skill set in mobile to drive really meaningful volume. At that time, no competition for insurance on native mobile on either Google Play or the App Store. Like I think Lemonade was had probably launched in and things like that, but it wasn't any meaningful scale. And folks are still starting to roll up these businesses. And we launched in Canada, we launched in the United States, and within a couple of days, we were given a playbook we had developed, able to rank number 1 through number 3 for every combination or permutation of insurance-related keywords in the United States and Canada. We ranked number 1 for insurance, car insurance, home insurance, life
On
insurance
the App Store?
on the App Store and Google
Wow.
Play. Yeah, and so like it took our skill set of building consumer products to a very simple set of views. Like you log in, you answer some questions, you make a request, and then we thought we'd make a lot of money working with brokers by sending them leads. And turns out that brokers are they're smart people. They've got relationships with folks locally, but they are not calibrated to work with technology companies who are sending them customers in real time, right? And so we built our own national insurance agency from scratch within a year, and then from there on in, determined that some insurance companies are probably not worth working with, worth the effort to work with. And so we built our own insurance program that we've been scaling since then. And through that arc, we took our acquisition on mobile skills, turned them into build a national insurance agency. Had to figure out the licensing to do that and build the relationships to do that, all the way to, hey, I'm going to design the insurance, get it approved by the regulator, find reinsurance. So this is a pool of capital I'm going to sell risk into, conform to regulations, start to issue our own policies, handle claims management, and everything else, right? So when I was talking about having to scale yourself, as you grow your business, this is very true for the case of cover, right? Like the scope and the surface area of things that we had to become proficient with expanded dramatically.
Right.
Yeah,
Uh,
yeah,
I might be very like clueless in this space, but so when I, and correct me if I'm wrong, I don't know this, but if I'm looking for an insurance, I usually go on like Google, right? I've never gone on the App Store or like, Play
yeah.
Store. Is that a new trend? Is that what millennials are doing, right? Like what's happening?
Yeah. So I think it's a function of like the value added services that we've started to embed, right? Like you're right, you're absolutely right. The number one place that is most efficient, for financial services and insurance is Google. It's super high signal, which is why the CPCs are very, very high, right?
Yep.
Our initial hypothesis was that the mobile, like native mobile, was inefficient because there's nobody there, right? And if you've got an arbitrage, you can kind of live off of that for a little while until you get to a value proposition that's super compelling for people, right? And then it's not just so combination of very fairly priced insurance. Don't buy, no hard pushes. You have the ability to text us anytime to ask questions or buy a policy, which is a huge, like massively used feature. We get millions of texts a month. Uh, which is crazy. So effectively, it was an arbitrage, and
Yeah.
even at small scale, is sufficient for our purposes, right? Then you start to build a value proposition, and then product starts to play a part of growth because if you're doing what you say you're going to do, right? You are saving people money, you're saving people time. Your customer service is exceptional, and it absolutely is. If you take a look at the cover product, you're solving other problems they have, whether they're cash flow related. You're going to start to get referrals, right? And start the product starts to become part of the growth mechanism. That being said, like yeah, you're right. Like web is still dominant for insurance. We own Cover.com and haven't really needed to build that property up, but eventually we will.
Makes sense. No, don't get me wrong. I completely understand, and I love the value prop you have, right? Like, makes sense. The biggest challenge anytime I'm getting insurance is I have no freaking idea what I'm getting, right? And then the idea of dealing with the person, like, trying to find them. Like, I love that I can text message. Like, I'm, being young, and I just want to be able to like exactly know what I'm getting and being able to connect with somebody, right? Which is your main value prop. And I was even remembered watching your podcast when you said like you guys were also like doing one more thing. By the way, you guys are not in Canada. You guys don't do insurance in Canada right now, so I haven't used you guys.
We don't.
But
Yeah.
but I still remember you guys you were talking about how like for home insurance you could do a like a camera and do all that, right? It's amazing. Makes
Yeah.
complete sense to me.
Yeah. And look. Another side, like a side effect of being on native mobile is that you get more sophisticated signal, right? Like the whole point of insurance is to be efficiently priced, right? Like if you have more information, people who are better risks, irrespective of where they sit on the socioeconomic spectrum, are going to get lower rates, right? And so if you have pictures and videos of property, if you have things like initial location, uh, you know, scan a driver's license and pull up reports automatically. All of these things, at the end of the day, just give us a better sense of what pricing should be, and can give us the ability in a relatively elastic, commoditized business to compete on price, which is a big part of what people care about, right? In
Make,
insurance.
makes sense. So
Yeah.
would you say like the initial channel of growth was like you said App Store or Play Store, and then from there it moved to referrals? Like that's just
Yeah. No,
yeah.
you still, I mean, to scale a meaningfully sized insurance business, you still need to spend a lot, right? Like Geico has a $2 billion plus ad budget
No way.
every year. No, it's
No,
that's absolutely that big.
crazy.
Um, right. And so you can do the back of the envelope math to determine
Yeah.
what the CPA is for that, right? Like, it's up there. So yeah, no, we're still big spenders, right?
Okay.
But the product has to delight. Like, you have to be able to solve a customer's problem, and we know who our customers are. The young folks, right, that don't know anything about insurance, and they want somebody to make it super simple for them, right? Uh, as you described, if you're going to drop $1,800, $1,700 a year on insurance, a couple of messages that are confidence inspiring
Yep.
between yourself and an advisor goes a huge way, right?
Yep.
And then, because it's an app, we can do things like, hey, you're now a year in or 6 months in, no violations or accidents. We can unlock another 10, 20, 30% off. That's delightful, right? And it's
Yep.
not going to be something that's coming from your typical aggregator or web insurance experience.
Makes sense. Dude, I can go about it. I can say so much
Yeah,
bad stuff about other aggregators, so don't even get me started. I completely know where you're coming from, and I
yeah,
totally see the value. Um, so I want to talk about your YC experience. Um,
sure.
what was your YC experience like, and how did like what made you wanted to get into it, and how did it make you feel when you found out you got in?
Yeah. We applied to YC with StyleKick like 3, 4 times, something like that,
Okay.
and didn't get in. I think we got interviewed 2 or 3 times for the same idea. It was crazy, and it was, hey, 10,000 actives, like 50,000 actives. I think the last time that we applied, it was like 250,000 active users. And then we're just like, we're not going to get in with this idea. This is not YC's bread and butter. And then ended up at Shopify. But with Cover, we applied once and we got in with more or less the idea, right?
Wow.
And I think what that, at least the application process taught me, was that clarity matters, succinctness matters, and that you identifying the nugget of value that you're going to be delivering to your customers early on has a very big impact on what the ultimate trajectory of your business looks like. And whether that's during YC or not during YC, you need to get to a point where you can succinctly state that your business allows people to do something, right? And that something makes you money. And as soon as you can parlay, as soon as you get to that point, you can parlay that into, hey, it's sizable. I can help people see dollar signs, and it makes the fundraising process 10x easier. So that was getting into YC. What you know, YC was kind of what I expected it to be, right? Like, it was, if I'm paraphrasing, the the feedback and advice is absolutely applicable, broadly, not just to our business. It is focus, right? Don't hire people, maintain your burn, try to generate $1 of revenue. As soon as you validated that, try to expand that. Find product market fit as quickly as you can. Don't spend money until you do. And when you do, you can start to ramp up, right? A lot of the dumb things that we as founders, as early founders, did, I think that YC does an exceptional job of helping, us and other folks avoid some of those, like, gaping holes that would otherwise derail us in building a business. So I'm very appreciative of YC for that.
Got it. And
Yeah,
what is your advice? Since you said you tried 3 or 4 times with style cake, and
yeah,
like, that was the kind of an idea that wasn't in YC's what kind of
sure.
YC funds or whatever it might be. What is your advice for people regarding like trying to get into YC or like handling rejection?
Yeah, I mean, people are going to say no to you every day,
Yep.
right? So one of the reasons I think I've done okay at this job, and I'm not the greatest at it, I think I'm still trying to improve, is like, I did door-to-door sales when I was a kid, right? I would walk, I would take the bus, go to neighborhoods that I didn't know, knock on random doors and sell like light bulbs. I sold like knife kits. I sold water coolers. And you have a 99.99% rejection rate, and eventually get really good at the tactics that are necessary for you to succeed. So look, like, the truth is, if you venture out on your own and you put yourself on a limb, it's like one of the highest leverage moments for you, right? Like, either you're going to definitely fall flat on your face, but you should just know that, going in, and acclimatize yourself to it, right? It's a learning opportunity. I think of everything as compost, right? So as you're tripped up, as people say no to you, You just need to refine your approach and figure out, what the hooks are that are necessary for you to move on to the next step. That's it. That's handling rejection in a nutshell. You don't, but harking back to your original question, I don't think you need YC, right? Like I think what you need is an archetype for, do you have conviction internally that this thing could work, and then have you supplemented that conviction with real life data, right? Like what are your customers saying?
Yep.
What are your dashboards? Maybe you even don't even have dashboards. Maybe you just have like you know uh, simple heuristics, but are they directionally correct? Is something growing, right? Is perhaps the thing that you're building on good, but your customer is telling you that something else would be great, right? And perhaps you focus on that. And I honestly don't think you need YC to do that, but it is a forcing function, right? To see a set of other very smart, talented people around you doing the same thing and finding their path, right? In that kind of way.
Love it. Final question. One thing that I love about you, and I've noticed this a lot, and I've even listened to your podcast, I noticed this, that you're very good on, and you said right now as well, you're very good on seeing what's working and then doubling down on what's working, like without letting your emotions or your ego get in the way. Like you're very good at that. How did you learn that skill, or were you always good at that? Like how did that come
Um,
about?
I don't know. I think it's I don't even know if it perhaps is a learned skill, right? Like, uh, it, I and perhaps it's because this is the second time around, right? You have clarity of thought around, hey, if I had just done X, Y, and Z a little bit different, or been a little less stubborn about, a particular approach last time around, would have been a different outcome. Um, I think my opinions are just loosely held, and when my expectations are violated, right? Like I have preconceived expectations of how things will go. When they're violated, I'll double check, and if they are, then that's the new reality for me. That's the new operating reality, right? You just have to be able to adjust, and that's it, right? If you're not flexible enough to do so, eventually you're going to go to zero.
Like, cool. Final segment. So I do a four quick fire 1 to 2 sentence questions with everybody. So
Sure.
I'll ask you that. So first one is one unconventional thinking outside the box kind of thing you guys did in your business in cover.
Unconventional thinking. Um, I mean, we launched an insurance app without knowing anything about insurance. I would say that's a good starting point.
I love
Yeah,
that.
yeah,
Okay, second one is
yeah.
advice for someone applying to YC.
Um, Keep it short. Our best applications took us 20 minutes. Cover took us 20 minutes to do.
Advice for someone starting their first startup.
Uh, this is a hard one. I actually have kind of in the camp where I don't recommend art entrepreneurship anymore, because I don't
I'm
think it's for everybody.
I'm the same as
Yeah,
you, by the way.
but yeah, I don't think it's for everybody. I think you sometimes you come across founders where like new founders where it is very clear, right? Like their risk return, like risk return kind of is broken for them, right? It's not broken, it's kind of bent, right? And that maybe it's pattern matching, maybe it's not, but that becomes very very obvious very quickly. Uh, so I don't actually recommend it to those folks, but when I do come across a person that is like super highly motivated to scratch the itch, then I'm like, okay, like here are the resources that can be helpful. But the advice is just figure out if it's right for you or not, because it doesn't need to be, right? There's no glory in
Yep, yep.
uh,
Don't
in
get caught,
in
don't get
this.
caught up
Yeah,
caught up in the hype,
yeah,
basically. Yeah.
yeah,
So here's
basically.
out of curiosity, here's what I feel. I have the same kind of mindset as you, where I'm like, I never don't recommend it to anybody. It's like something you have to like really go through and understand, and not get
Mm,
caught up in what the media shows you or whatever. But at the same
mm,
time, I also believe that, let's say if you were starting early, let's say if you were starting at 20, 22, whatever, right? And you
yeah.
go through that crazy process of the startup world, even if you fail, like you're gonna, at least I think you're gonna learn so much that it makes you really stronger for the jobs or for moving on in your career. What do you think about that?
I tend to agree with you. I do think that the folks that I found to be highest leverage have maybe a year or two of work experience to develop some polish before embarking on building a business. But obviously, that's not like it's not a hard and fast rule. You can come out of undergrad. You could be a hacker or a hobbyist and build things on the side and pick up the business skills very, very quickly as well. So yeah, I mean, the younger you are, like, yeah, you don't have kids, you don't have a mortgage, you don't have white picket fence. Like, your lifestyle is still very conducive to sleeping on a mattress on the floor. Uh, so it's not a bad time, but don't force it, right?
Yeah.
Like, if it's there's something you're genuinely interested in pursuing, or you think you've uncovered something that other folks have not, uh, then kind of go.
Makes
Yeah.
sense. Cool. And the last question is, if there was only one thing that people could take away, something that has helped you in your life a lot, what would that be?
Uh, so I think retroactively, right? Irrespective of what you do, I don't like this is 7 years in of being self-employed. You should stay healthy, right? Like the stress is going to be intense, and whether you work for yourself or not, it's going to be crazy intense. But you want to be able to look out a decade or 2 decades and be like, I treated myself decently well, right? As well. So I think it's the most underrated thing. Go to the gym, drink water, don't smoke or drink too much. Like the standard stuff your parents. I don't even know if your parents, whatever. The standard stuff that you think is common sense still applies.
Makes sense. Awesome, man. Thanks so much for doing this. Any final thoughts or anything?
No, man, I really appreciate you carving out some time to chat. A little jealous here in Canada, and I haven't ventured back yet. But I'll make my way back up north.
I'm excited to
Yeah,
see you, man.
yeah, yeah.
Thanks so much for doing
Really
it, bro.
appreciate it. Cheers.